What's up, guys? My name is Andrew, and this is Broke Man Finance. If you're like me, you're already looking ahead to 2021 to kind of change some things around in your portfolio so you have even better returns for next year. Although 2020 was a year, let's be honest, most people just want to completely forget about, it was overall a pretty good year for us as investors. With the massive dips in the markets earlier in the year, towards the end of the year, we saw the market really recover and put up some numbers that most people really didn't think would happen because of all the economy issues, the shutdowns, the COVID-19. It really kind of turned out to be a positive year, at least for me and my portfolio. So as we wrap up this crazy year, I'm covering 3 top IPOs that I'm looking to potentially add to my portfolio when they release sometime in 2021. Now, if you're new to investing or really don't understand what an IPO is, an IPO is called an initial public offer. And in basic terms, what it does is a privately owned company opens itself up to investors on the stock market. This allows people like you and I to buy stock or shares of that company. And as a result of that, it helps bring in millions, if not billions of dollars of income to that company, which ultimately lets them expand and grow their product or their services. Now, of course, there are more than 3 IPOs set to be released in 2021. I'm not saying these 3 are the 3 for you. I'm just saying these are 3 IPOs that have really piqued my interest and I'm potentially looking to add to my personal portfolio in the new year. Now, before we go on, if there's an IPO that you're interested in and you haven't seen a video done, feel free to put those in the comment section and Adam and I will try to do a good review video of that IPO and kind of add some different perspective or opinion on that company. So let's go ahead and get started and talk about IPO number 1, and it is none other than Robinhood. Now, I'm excited about this IPO because Robinhood is a company or a product that I use every day. I have several different trading platforms that I use for different information, and Robinhood's one that's on my phone. I pull it up, it's very user friendly. It does have some limitations as far as data and analytics, but again, it's something that I pull up every day. I can quickly trade my stocks on it, do my options on it, and it gives me just a brief snapshot of what's going on during the day concerning my stocks and the overall market. Now, Robinhood completely changed the way people could trade on the stock market a few years ago. These 2 guys completely flipped the trading game upside down when they launched the app and started to not charge any commission fees for its users. Since their initial launch, Robinhood has been growing each and every day and they show no signs of slowing down. Back in 2014, their inaugural year, Robinhood had a measly 500,000 users with its account. Fast forward to this year alone, they're up to over 13 million average users. But as investors, we really like money and we really like revenue as one of the things on how we analyze and review a company. And Robinhood has produced some good numbers. Back in 2015, they brought in a measly $2.9 million in revenue. Fast forward to Q2 alone in 2020, a $180 million. So obviously they're growing. Again, if you look at the years compared to just the quarters, they are showing that they're bringing in a massive amount of money compared to where they started at. So when we talk about revenue, how exactly does Robinhood make money? Well, they bring in money on several different kind of avenues. First one is rebates from market makers and trading venues. Then you look at the Robinhood Gold, which I currently have, and it charges $5 a month and just provides you more information or more data if you're looking at in-depth research on particular stocks. Then they do stock loans and income generated from cash. This is where people who have, whether it's $5 or $50,000 sitting in their account, where they think of it as free cash, where you can make that trade immediately, they're making interest off that cash, and it helps obviously fund the company. And then they have a cash management system. But here's where it gets interesting. If you're comparing Robinhood, because obviously they're a brokerage firm, to the other major companies, they are behind and they are a smaller dog in the fight. Robinhood right now has roughly $20 billion of assets under management. Compare that to really the big dog, Charles Schwab, which has $3.8 trillion. Then if you look at the bottom of the screen, Robinhood's average account size in comparison to the others, where they have roughly $1,000 to $5,000 in individual accounts on average, where Charles Schwab has an amazing $240,000 under average account size. But overall, Robinhood does have some key stats and facts that really helps this company. Again, Robinhood's second quarter revenue in 2020 eclipsed all the revenue made between 2015 and 2018 alone. The average user of Robinhood is roughly 31 years old, which is relatively young compared to the other investment apps. This age, although, has increased since the app launched in 2015, when back then the average age was only 26 years old. Robinhood has raised a total of $1.5 billion in 13 different funding rounds, and also claims to still not spent most of that funding, which tells me they could potentially have over $1 billion of cash on hand, not counting what they bring in with this potential IPO. But here's the thing that I really like, because it shows me that Robinhood is continuing to grow. They haven't really plateaued yet. Robinhood was the 10th most downloaded financial app in 2018 and 2019, but since has reached number 4 and 7 in the iOS and the Android app stores. But with anything new, company, product, the list goes on, you're going to have setbacks. And unfortunately, Robinhood did have 2 major setbacks on probably the worst day of the year, back in March the 2nd and back in March 9th, where we're seeing as critical days by stockholders because of the COVID-19 lockdowns. This is when even Amazon was trading for like $1,800 a share, and so everyone's either selling or buying more. It was a stock trading frenzy, and Robinhood app shut down, and it really kind of put a black eye on its users, and it probably pushed some of the users. Although smaller in comparison to the other brokerage firms, I'm liking Robinhood. I'm curious about what they will be, and it really breaks down to 2 things for me. One, what will be the overall valuation of the company when they release, and what's going to be their target stock price for that initial IPO. Robinhood has built its business and its brand on letting the average Joes be exposed to the stock market, not charging any commission trading fees. And really, when you look at those account size, average day Americans and really other non-Americans in other countries are able to utilize this trading platform. So if they end up coming out with an insane target price of $200 a share, a lot of us average users simply aren't going to be able to buy into that unless they have the fractional shares. So those are 2 key things I'm looking at. Overall, I'm still excited about this company. I love their product so far, and I'm looking for this IPO. So moving along, IPO number 2 is Petco, which is listed on the NASDAQ, ticker symbol as WOOF. Petco is currently the 2nd largest pet supply store in the United States, with over 1,500 stores in the U.S., and they also have stores in Mexico and Puerto Rico. According to the U.S. Vet Medical Association, it is reported that Americans alone own over 77 million dogs and 58 million cats, which provides Petco with a huge consumer base. But when we look at Petco's financials, they're kind of limited as far as the research right now because they're not a public traded company. But 10 months that ended in October 31st this year, Petco net sales rose 9% to $3.58 billion compared with the same time a year ago. Also, same-store sales have jumped over 9% so far this year. And when we talk about improving its financials, Petco is also improving its profitability after reporting net losses in 2018 and 2019. In the first 10 months of 2020, the company reported a net loss of just $20 million, narrowing its losses compared to the same time a year ago by 77%. Basically, they have decreased the amount of money they have lost by over 77%. But Petco understands they have to be innovative, they have to evolve. So over the last 3 years, after same-store sales turned negative, Petco invested over $300 million to modernize its business, including building an e-commerce site and launching that online retail service. And then also they launched a full-service vet hospital network. So with a renewed focus, really focusing on online retailing and also improving their brick and mortar stores, Petco has shown me that they are serious about being on a legitimate path forward. And I think they have a lot to offer potentially to investors in the coming years. If Petco's IPO launch is even remotely close to what Chewy did this year, investors who invest early on with this IPO is poised to make a lot of money potentially with this company. Now, Chewy is PetSmart's online retailer, and just this year alone, their stock price has increased over 250% because of the rising demand of customers and needing products for their pets. Last but not least, the last IPO is Stripe. Stripe primarily offers payment processing software and application program interfaces for e-commerce websites and mobile applications. Chances are, if you have purchased something on Amazon, Google, Expedia.com, the list goes on and on, you have used Stripe's processing software. Stripe was also listed as #1 on CNBC's top 50 disruptors list this year. If 2020 showed me anything as an investor, it is companies like PayPal and Square absolutely crushed it this year with their earnings because of contactless transactions and really the force of people using digital transactions to process money. For example, PayPal is up over 100% this year, and Square, which is just going crazy, is up over 250%. Of course, we all know that contactless transactions and this mysterious national corn shortage help drive these numbers up, which oddly, there don't seem to be a corn shortage anymore. Of course, Stripe benefited from this as well. Co-founder Patrick Collison tweeted back in May that businesses launched just in March to May had already brought in $1 billion in revenue. According to the NASDAQ.com, Stripe is being listed as one of the most undervalued companies per their website. Back in September, even billionaire investor Bill Ackman was talking about using his SPAC, Special Acquisition Company, to help bring the company go public. Although an exact date hasn't been released yet, it is obviously looking like 2021 is the year for Stripe to go public and release its initial IPO. So let me know what you guys think. I would love to see your comments in the comment section. As always, thanks for supporting the channel. If you haven't done so already, hit and smash that like and subscribe button. Stay safe, and we'll see you on the next video.